Hello everyone, Alex Winkler here, head trader at the Enslow Fund. In this lesson, we're going to review how to buy the breakout, my personal favorite strategy. Please subscribe if you're new and like this video at the end if you found it helpful. Also leave a comment below if you have any questions. I'll definitely be checking that all the time. So yeah, let's get started. So buying the breakout is not necessarily easy, especially for me moving from equities and then trying to buy as a maker. So the reason that's a bit different is because being a maker, you don't pay you pay either low fees or no fees at all. But coming from equity, you typically just pay a fee for executing a trade. Say I want to buy right now, no matter what my size is, and that costs maybe $5–10 depending on your broker. So in theory, this shouldn't really make a difference. I could also be a taker with crypto, so just kind of placing a trade whenever I want to. But let's say I do that on one of my favorite exchanges to trade on, GDAX, or now Pro.Coinbase. I would be paying 0.3%, which doesn't sound like a lot, but our average trade is about $10,000. And so that could really add up. If you do 0.003 or 0.3% times 10,000, you get $30. So if you're looking to make between 3 and 10% a trade, it still kind of eats away at your profit. So I try to avoid that. But regardless, being a maker or taker, it's kind of beyond the point. And buying breakouts as they happen is still risky because fakeouts are common. So that's kind of what we're going to be focusing on in this post: how to avoid the fakeouts and try to get ready for it. How to buy a breakout in the best way. So I'll share my two favorite ways to do it. So the first way I like to buy the breakout is to average in before the breakout. This is definitely, I would say, the least risky. However, it could get choppy, and if you don't have a clear strategy, you might get freaked out, and it can be also time consuming. So in a nutshell, the key to this is you want to start buying at low points on the way up to the resistance level you're targeting for a breakout. I have a bunch of charts below, so we're going to be reviewing that. But basically, if you think the breakout level is, let's say, $50, and the price is kind of going up to that, you want to start building up that position before the breakout and not buying on the breakout. So that's kind of the basic concept of that one. This is the least risky because if it does not happen, in theory, you can still get out with a small gain. However, that's the best worst case scenario. So worst case is you unnecessarily average down and you kind of get stuck in a big position when there's actually a breakdown, not a breakout to the upside. To avoid that last mentioned scenario is kind of always cut your losses quickly. The second the trade isn't really doing what you expect, just get out. Also define your trade ahead of time, like I mentioned. Don't come up with a new plan along the way just because you're seeing something and you're like, maybe I should do this. If you're getting to that point in the trade, it's a bad sign. So the second way I like to buy a breakout is to buy the breakout bounce. So the breakout happens and it might go up 0.5%, or there's a clear breakout, but not buying that breakout, waiting until it comes back down. It broke out from a line, so that resistance level is now your new support. So wait till it comes back down to that and buy that bounce. So in a nutshell, I guess that's just what I explained. But the best practice for that is if the price does not bounce hard enough, or the volume dries up, or there's massive sellers taking over, it's also good to get out because those bounces aren't a sure thing. It's not a science. So if you feel like the bounces are not strong enough, definitely get out. You'll know over time, kind of, you'll get a better feeling of what's a good bounce. On the bright side, you will know relatively quickly if you made a right choice or not, because these bounces don't last all day. Maybe if you're doing an intra, like a weekly chart, and then you're looking at a day pattern, you kind of see that breakout. But on the daily, I usually use the 15 and 1 minute chart. These bounces you'll know fairly quickly, within 5–10 minutes tops, maybe even quicker, maybe under a minute. So let's review some of these breakouts. We're actually going to be using some trades that I made recently. That way I can link to them. There's so many more trades I wanted to add, but it was kind of already filling up as it was, and I just started adding all trades under, so all the day trades under day trades and all investor trades under investor trades. So I always documented everything in the chat. I also made video lessons, and I had everything in the Google Sheets that I shared. However, it was a bit hard from what I heard and kind of what I also experienced for the users to follow those trades. So each trade has also a post. So you can kind of dive into the trade, see what the profit, see what the loss was, and then you could see the review afterwards. And you can always go back to that trade whenever you want. So to get to the good stuff, so this was a recent 10+% swing trade that I made. It was on our watch list, and we reviewed it in the video lesson. So just click those links if you want to see more about that. But basically, what we did on this one is we were looking for the 84.5 breakout. So that's around this level. We wanted to break out from this. And I don't want to buy the breakout because I'm just not that good at that. There's a lot that can go wrong. It could be a fake out. What you could see is that there was a nice breakout bounce. So you could either buy the breakout or wait for the breakout bounce if you like to be the traditional way. But what I did instead was I had a very good feeling that this was going to happen simply because we had a nice price trend reversal. I talk about it in the video lesson, so you could read all about why I made this trade. But the important part right here is I turned this trade into an investment trade or a swing trade because I was traveling in Russia at the time, and I didn't really have time to watch the charts. So I put an order here, and then when that got executed, I later put an order here. But my ultimate goal was this breakout, and I wanted to sell into it. So we had actually a beautiful breakout. I could have even bought the bounce again. I just missed that. I also missed this whole run up. I didn't get back till later in the day when I kind of saw it over here, and it looked pretty good. So I put in a sell order at 88 roughly. It was an overnight order, and I woke up to that being taken out. So here's actually a 60-minute chart where you can kind of see the whole thing in a broader view play out. So this was actually a near close ideal trade. I had everything written down in the Google Docs that I shared, and it almost followed it perfectly. So that doesn't always happen. So it's quite nice to see that, especially because June was not my best month. It was I don't know, there was a lot of moving going on, a lot of things going on with the company, so I was so focused on that. So it was nice to finally see a trade perfectly work out. So example 2, since dip buying is tough and dangerous, so dip buying. So right now we're talking about when the price like really just falls down. This is a classic waterfall chart that in the course, day 2 or day 3 we talk about. I also have a video coming out for that. But you don't want to kind of be caught catching a falling knife. So how do you buy these bottoms, right? And again, you can use the same strategy. Usually you will miss the big bounce, but that's fine because missing the initial bounce is much better than trying to catch a price dropping, because you might be down, I don't know, 1 to 5%. You might even be down 10% at one point if you don't cut your losses. And then if the big bounce happens, you're going to miss it anyway because you're going to be so deep in the hole. So avoid trying to find that bottom. You're always going to get burned. I mean, maybe that, like occasionally you're going to get lucky, but it's not a strategy. Really, you should follow. So I'm actually going to review a trade that I went fairly wrong. Luckily, the price did eventually do what I wanted, but I ended up getting way in too early. So I kind of actually did this. I tried to guess the bottom. I also got out way too early because I made 2 mistakes along the way. And this was just kind of classic last month. So both of these could have been avoided if I just stuck to my favorite strategy, and that's why I want to review buying the breakout, especially for these breakdowns. So okay, we get right into the chart. So if you see this plus sign, this is actually when I initially got in. I was trying to buy this double bounce or this double bottom, but it clearly broke out. So that was me basically guessing the bottom. What I should have done was wait for a clear capitulation where the price just goes super far down and then buy this bounce. So here, actually not this bounce. I would wait for a bit more of a confirmation. So these 3 red candles, I would try to buy into that and look for a bounce here. That's what I should have done. However, I still held because the price action was looking really good, and then I did get this swing up. Actually, this is an averaged in price. So my first sell was right at the tip of this tail end of this red candle, or somewhere around there. And then my second sell was actually near the perfect. It was over the 85. So this was my average price I got out. But the big takeaway here is trying to buy a breakout. So what I mean by buying the breakout is your goal is this $80 breakout. So when you're buying at, let's say, 79.60, 79.70, your goal is for it to break out of here as a confirmation. If it doesn't and kind of fizzles out like this, it might break down again just like here. So then you want to get out and cut your losses, or maybe take that small couple $1 profit. But that would be a good time to get out. Once it breaks out of there, it's a good confirmation that the price might keep running. It might only go to here, 81 roughly. But that's kind of where and that's exactly why I got out half of my position here, because you always want to take profits off the table. There's no point in hoping it'll keep going higher and then all of a sudden it goes back down when you could have got out a nice chunk right here. And that's kind of what I talk about in this text. This whole trade was documented here, just to give you guys an idea what that looks like. Wait for this to load. This is what a trade will look like. So I have the number. I actually now list what coin it is, and then profit or loss. This is the opening comments. This is what you see in the trader, in the chat room. And then the final review is kind of what I'm doing now, but everything in hindsight. Then you have the document, and then you have the chart. Cool. I didn't really review these. Actually, these are all reviewed in other trades, but this is where I was again trying to buy the breakout. This one didn't make it. I should have cut my losses right away. But again, I've been, what's the word for it? Just kind of making a lot of little mistakes last month. In the beginning of this month, but finally things are getting a little better. I also do cut my losses fairly quickly, so a lot of these things don't hurt the overall account. Everything's under 5%, ideally. So the next chart we're going to be okay. This is a trade that went bad, and I was looking for a breakout. But what I did here was something I usually don't do, and I don't know, like I feel like I've been trading drunk or something, because here is a clear triple top, right? And I don't know how I didn't see that. And I bought right when it failed to break out and did the dip, right? So basically buying the dip, but the problem was I didn't buy the dip here, I bought it here. So if this broke out and dipped here, then it would have been a good buy. For some reason I bought here. I don't know what I was looking at, but the one good thing about this trade is that I actually got out a bit late. I should have got out ideally as soon as possible in here, but I did kind of wait for a bounce, but the bounce wasn't strong enough, so I got out. Luckily I did, because this could have ended in a let's see what kind of price. Yeah, 10 to 20% loss depending on where I got out. Luckily I think this was my biggest loss. It was about 4.7%, because I did wait so long. Okay, so here's a little test. if you're reading this, don't scroll past this. Kind of stop here. So based on this chart, where would you buy? You could use this as, pretend, don't really worry about the time interval. Trader, investor, it doesn't really matter right now. Just think pure technicals. Where would you buy this? So let me open the chart. So here you have your chart, and just think about that for a minute. Maybe pause it. Maybe come up with how you would want to buy it, or yeah. So pause it, and I'll review in a second. All right. I hope you made your guess, and leave a comment actually below and let me know where you put your initial guess. Now we'll review it. Okay, so if you ever want to go back, you can always read all this stuff, but I'll just dive right into it. So where you wanted to buy initially was, there was a nice consolidation, and then you see this breakout here of this former line, maybe around the 0.6. The price just couldn't get past that for almost like 2 weeks, right? And then you see the price break out of that. That's a really bullish sign. So when the price goes back down and bounces on that 0.6 level, that's a very good confirmation. That's former resistance, that price ceiling now is a support. So now it's a floor where the price bounces off of. So that would have been an awesome entry. It also leads up to your first stair in the stair stepper pattern. So this is kind of a smaller one. Here's a larger scale stair stepper. Another entry would have actually been into this first or the second breakout consolidation. This is actually one of my favorite times to buy, because it really is a confirmation of the general price momentum shift. So here we have kind of a general downwards trend, and now we're officially in an upwards trend. So this would have been a second awesome entry, especially if, so two things you could have done. You could have bought here and then bought here again, or you could have bought here, kind of sold, and then when you saw this holding its high, bought again. Whatever kind of you prefer, you could always switch it up. Those two would have been great entries. Another great entry actually would have been, especially for an investor, would have been along this almost two weeks of consolidation. You could, basically where this high was before it broke out again, anywhere along maybe this bottom here would have been a great entry. And in your documents, Google Docs, as a strategy, you would want to have, I'm waiting for a breakout from this former high. So what is that? That's about 1.2 maybe, and that's your goal. You're waiting for that breakout. So when that breakout confirms, then you could basically, depending on your investing horizon, ride this out. I typically sell in the first or second bounce, so I probably would have sold here or would have sold maybe here. If I was super bullish and aggressive, I might have held longer, but most likely I would have got out at this 1.4, maybe 1.6 level. This trade I did not do. This is ELF. I've been trading ELF quite a lot. It's on Bitfinex, Binance as well. But the nice part about Bitfinex is that you have fiat currency, and the reason I don't like day trading Binance is because I like to always be in fiat at the end of the day. And with Binance, I spend so much time moving money back and forth, and if I'm day trading, I'm moving my fiat over, and then when my fiat hits the account like 20-30 minutes later, maybe the move I wanted was out, and then depending on what the swing of Bitcoin or Litecoin is, whatever I'm transferring the money over, I might have lost or gained some money. I don't know, it gets a little messy. I like using GDAX and I like using Bitfinex for my day trading. For my longer moves, I almost always use Binance because it's two separate accounts and I like to separate it. If I have my investment and my day trading account put into one, to me it like messes with my mind. So I really like to separate that, and I definitely encourage you guys to do the same, but it's all personal preferences. Alright guys, that's everything for now. Please leave a comment, like this, subscribe if you're new. That's it. Ciao, ciao.